Hi everyone, welcome back to the channel. In this video, I want to take a look at the catalysts that have led to previous crypto bull cycles and how they might influence an upcoming cycle. So, let's take a look at the previous crypto bull cycles. We have the 2013 bull run, which occurred between April 2013 and late 2013. During this cycle, Bitcoin's price surged from under $100 to over $1,000 by late 2013. During this period, there was a speculative rush from early adopters and increased media coverage. This was actually when I first heard about Bitcoin in a local newspaper. Next, we had the 2017 bull run, which lasted from January 2017 to December 2017. In this cycle, Bitcoin rose from $1,000 to nearly $20,000. Ethereum and other altcoins also experienced massive gains, driven by the ICO craze and growing interest in blockchain technology. Then came the 2020 to 2021 bull cycle, from March 2020 to November 2021. In this cycle, Bitcoin rose from under $5,000 in March 2020 to an all-time high of around $69,000 in November 2021. Other altcoins like Ethereum, Solana, DeFi tokens, meme coins, and NFTs saw substantial growth. This period was marked by institutional interest, the rise of DeFi, and the NFT boom. Looking back at these previous bull runs, we can identify two major influences that, while different in mechanism, work together to create a favorable environment for a bull run, something we can hopefully expect to see in the coming cycle. The first influence is Bitcoin halvings. Bitcoin halvings occur roughly every 4 years and reduce the block reward that Bitcoin miners receive by half. This limits the supply of new Bitcoins, creating a supply shock. The reduction in Bitcoin's supply, combined with growing demand, can drive prices upwards. This scarcity narrative surrounding Bitcoin every 4 years also fuels speculative demand and bullish market sentiment. As we've seen in previous cycles, bull runs tend to follow Bitcoin halvings by about 12 to 18 months. Let's take a look. In 2012, we had the first Bitcoin halving, which was followed by the 2013 bull run, where Bitcoin rose from under $100 to over $1,000. In 2016, we had the second halving, which was followed by the 2017 bull run, where Bitcoin rose from around $1,000 to $20,000 by the end of the year. In 2020, we had the third Bitcoin halving, followed by the 2020-2021 bull run, during which Bitcoin surged from around $8,000 at the time of the halving to $69,000 by late 2021. Now, Bitcoin halvings seem to be a major event preceding all the previous bull cycles, and we've already had the fourth halving in April 2024, where Bitcoin rewards were reduced from 6.25 to 3.125 Bitcoin. The second major influence in bull cycles, alongside Bitcoin halvings, is central bank interest rate adjustments. Let's take a look at Federal Reserve interest rates during the past 3 bull cycles. During the 2013 bull run, the Fed's interest rates were near zero at 0.25%, as the Fed was engaged in quantitative easing, QE, or money printing. The extremely low interest rates, combined with the excess money supply, created an environment with a lot of liquidity, contributing to the rise of speculative investments like crypto. In the 2017 bull run, the Fed had already started raising interest rates from 2015, moving from near zero rates to around 1.25% by mid-2017. Despite the gradual increase, interest rates were still relatively low, allowing crypto to thrive as a speculative investment during this bull cycle. In the last 2020 to 2021 bull cycle, the Fed slashed interest rates to near zero, between 0% and 0.25%, in March 2020 to facilitate massive QE money stimulus during the COVID-19 pandemic. This influx of liquidity contributed to the rising prices of speculative assets like crypto. So, to summarize, in 2013, when Bitcoin reached over $1,000, the Fed's interest rates were near zero with QE stimulus. In 2017, when Bitcoin reached $20,000, the Fed had slowly raised rates, but they were still low enough to allow a bull run. And in the 2020 to 2021 bull run, the Fed slashed rates to near zero with massive QE stimulus, and Bitcoin hit $69,000. Looking back at previous cycles, we can see that the combination of Bitcoin halvings and Fed rate cuts are interconnected, creating a favorable bullish environment. Halvings create initial bullish speculation by reducing Bitcoin's supply, while Fed rate cuts impact global liquidity, providing cheap money that drives investors into riskier, high-reward investments like crypto. The halvings are internal events specific to Bitcoin's supply, creating scarcity. Meanwhile, Fed rate cuts are external factors that increase global liquidity, encouraging investment in riskier assets like crypto. When both factors align, as they have in previous cycles, the chances of a significant bull run increase. Now that we've already had the fourth halving in 2024, let's look at what the Fed is doing with interest rates in 2024 and 2025. Interest rates have remained at a peak range of 5.25% to 5.50% since 2023, but the Fed is expected to start reducing them with a 25 basis point cut in September. Additional rate cuts are forecasted for the remainder of the year, potentially bringing rates down to 4.1%. By 2025, interest rates could be around 3.5%, with gradual easing. Some analysts predict steeper cuts, below 3%, if economic conditions worsen. Just like in previous cycles, these expected rate cuts through 2025 could positively impact the crypto market, potentially fueling another crypto bull run. Bitcoin tends to rise first, attracting investors, including institutional money, into riskier assets during periods of increased liquidity. If inflation concerns or a weaker dollar arise from low interest rates, this could also push international demand toward Bitcoin as a store of value. This pattern has already played out in previous bull cycles. Typically, Bitcoin rises first, with the most dominance, drawing capital and interest into the market. Then, as Bitcoin's price stabilizes and consolidates, investors often reallocate profits into higher-risk altcoins, sparking an alt season. During alt season, altcoins experience significant gains. If you've been through a bull cycle before, you know that euphoric feeling when everything seems to be going up and your portfolio keeps hitting new all-time highs. However, if you're new to the space, be warned that alt season and the accompanying euphoria are short-lived. There's only a small window to secure profits before prices come back down. Historically, this pattern has followed Bitcoin halvings in 2012, 2016, and 2020, where Bitcoin rose first, and altcoins followed with massive gains during the peak of the bull cycle. In the 2020 to 2021 bull run, Bitcoin started gaining in late 2020, while altcoins skyrocketed in early to mid-2021, just months after Bitcoin's rise. With the Fed continuing rate cuts through 2024 and 2025, it could create the perfect environment for a new crypto bull cycle. Personally, I think the next bull cycle will not be utility-based, but purely speculative. If you want to know my plans for it, check out my previous video. Perhaps in a 2028/2029 bull cycle, other factors like favorable regulatory actions, technological developments, and adoption in the crypto space will play a bigger role. But in this cycle, 2024/2025, I expect it to remain speculative. With that being said, thank you for watching. Don't forget to like and subscribe and hit the bell notification so as to not miss my next video.